The US dollar remains in range as the Fed repeated its recent message after the Federal Open Market Committee meeting overnight. Stocks strengthened, with the Dow hitting a historical intraday high of 14,546 before closing firmly at 14,511. As expected, the Fed left the policy rate unchanged and the asset purchases at $85 billion. Policymakers acknowledged improvements in economic developments since the January meeting, but indicated the still high unemployment rate would be a hindrance for the Fed to achieve its dual mandate. At the press conference, Fed Chairman Ben Bernanke stressed that one thing we would need is to make sure that this is not a temporary improvement. He also talked about the job market and said that the still high unemployment rate, in combination with relatively low inflation, underscores the need for policies that will support progress towards maximum employment in the context of price stability. Economic projections were revised modestly lower, showing less growth and inflation but a better job market. The top end of the range for 2013 real GDP growth tightened to 2.3 to 2.8%, compared to 2.3 to 3% as of December. The core inflation range eased to 1.5 to 1.6% from previous estimates of 1.6 to 1.9%. The unemployment rate was revised lower to 7.3 to 7.5% from 7.4 to 7.7% previously. As in December, the majority of meeting participants continue to expect the first rate hike to come in mid-2015. The modest downgrade of staff projections was to reflect restrictive fiscal policy and downside risks to growth. Economic data released in the Asian session was also risk supportive. New Zealand GDP rose more than expected to 1.5% quarter-on-quarter in Q4 versus consensus of 0.9%. That's also much better than the prior quarter's 0.2% quarter-on-quarter rise. Also, it's nearly twice as strong as the Reserve Bank of New Zealand's forecast of 0.8%. It's believed that the data would trigger the central bank to rethink their position of keeping rates unchanged, at least until next year. On the other hand, the HSBC Chinese Manufacturing Purchasing Managers Index rose more than expected to 51.7 in March versus consensus of 51.2. The data suggested that recovery in China is still underway, even though the pace is modest. And the weaker than expected reading back in February was much likely a result of the Lunar New Year holiday. HSBC noted that the Chinese economy is still on track for a gradual growth recovery and inflation remains well behaved, leaving room for Beijing to keep policy relatively accommodative. However, data from Japan was not too encouraging. Japan reported the 8th consecutive monthly trade deficit at 1.1 trillion yen in February, worse than expectation of a 1 trillion deficit. Exports dropped 2.9% year-on-year, while imports rose 11.9% year-on-year. Exports to China dropped 15.8% year-on-year, while exports to Asia dropped 5.2% year-on-year, and exports to the EU also dropped 9.6% year-on-year. Though exports to the US rose 5.7% year-on-year, the overall picture indicates that the impact of the recent depreciation of the yen is yet to be seen and will support the case for the Bank of Japan to weaken the yen further to boost exports. Cyprus has announced its banks will remain closed until at least Tuesday after the parliament rejected the rescue plan with a bank deposit tax proposal. It's reported that Cyprus is turning to a new Plan B and would be discussed today. The proposal might still include the controversial bank levy, but would also include a structural investment fund, which will be reinforced by various provident funds and other sources. The fund could also link to a bond issue and natural gas prospects. Russia's finance ministry reported that Cyprus is seeking a €5 billion loan in addition to a 5-year extension of a loan of €2.5 billion that matures in 2016, but no progress has been made so far. Looking ahead, PMIs from the Eurozone would be a major focus, while the UK will release retail sales and public sector net borrowing. Canadian retail sales, US jobless claims, housing data and the Philly Fed survey will all be featured in the US session. For all the news affecting the Forex market throughout the day, please join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.